Worst housing market in America is now Cape Coral, Florida. Home prices have been battered by everything from overbuilding to insurance costs. Mind you, that's all, and realtors warn there's further to fall. Mind you, that's always the irony, is that in red states where it's so easy to build, you end up overbuilding and home prices fall, which actually makes housing more affordable, which is great for new buyers, but bad for investors, right? Cape Coral, Florida, they came in droves via Zoom, probably during the pandemic. Thousands found an inexpensive slice of paradise in Cape Coral, Florida, a city with more canals than anywhere else in the world. Wow, that's cool. House hunters were so taken with this boating community of Florida's west coast that many purchased homes sight unseen during the early years of the pandemic. Median home price soared 75% to $419,000 in 3 years, transforming the community. Now, 3 years later, for sale signs line every other block. Open houses are deserted for hours, foreclosures are ticking up, and home builders are listing half-built shells at discounts as they abandon their projects to cut losses. Locals say the lack of traffic has led to an increase in vehicles speeding through empty residential streets. Well, let's take a look at the Redfin data center on this, just to get a peek here. New listing prices. Oh yeah, look at that. 2025 is the blue line right here. New listing prices are 5% on list price under their 24 levels and substantially under their 2022 levels, probably to the tune of about 15-ish% or so. Let's see what we got on median sales prices. So these aren't listing prices. These are what things are actually closing for. Things are closing for about $369,000. That's compared to, at peak in 22, you were sitting at about 421. So 369 divided by 421. Yeah, you're about 12.4% lower peak to, I suppose this peak over here, a little lower if you go down to here. And if we look at month supply, you can see month supply is exceeding all of the prior 3 years here, as basically homes sit on the market longer. The number of active listings is higher than any year prior, and as a result, prices are falling. Not a terrible surprise when you overbuild and you have a temporary inflow of people moving to the area. One thing I think people forgot about COVID markets, it's not just that you can overbuild in a COVID market, but it's also that flow of people as part of the exodus out of California stops when the exodus catalyst stops. People were leaving California in droves to places like Texas and Florida because they were tired of the draconian lockdowns imposed by people like Gavin Newsom, who's a terrible person in my opinion. But the point of that is, let's keep politics aside, when that catalyst stops and all of a sudden California becomes less terrible, fewer people leave to go to Texas and Florida to migrate out, or potentially even people reverse and go back to California if they can afford to come back to California. It's possible they're also now stuck where they've gone. Now you have less of this impetus of people moving into an area that has now also been overbuilt, assuming people are going to continue to come. And so what ends up happening? Well, prices go down. This is always the irony when it comes to people saying, oh, we should build affordable housing. You don't need affordable housing. You don't need rent stabilization. You just need more building if you want prices to come down. And usually it's those blue state policies that actually restrict the level of new building that you're seeing. Actually, if you look at California, what's really interesting is just in the last 13 hours, you actually saw a new limit passed to CEQA in California, which was one of the big environmental challenges that actually limited building in California, because basically anyone could file a lawsuit to hold up new construction development for years. And California finally signed legislation that would essentially speed up development of homes in California by limiting how much CEQA lawsuits could end up restricting new housing developments, which is great. See, I'll read this. For years, pro-development advocates and the building industry argued that neighborhood groups and environmentalists wielded CEQA to delay or halt new developments. Very true. Now, a large portion of urban infill housing developments, housing built around existing developments, will no longer be subject to the law. This means developers won't have to research or mitigate the ways new construction could impact local traffic pollution, noise levels, or other environmental factors. Remember, anybody previously had the opportunity to file a lawsuit saying, hey, your new development is going to hurt whatever, one of these items here. And it really led California to restrict its ability to develop at all. Again, leading California home prices to continue to go up year after year after year. This is somewhat of the irony that I think is lost often when it comes to real estate analysis. But, having been involved in real estate for coming up on 16 years here, as an investor, as a broker, as a lender, you name it, and running a real estate startup, Houseack, which you can invest in, by the way, as a non-accredited investor. You earn 5% yield through conversion and all the upside in the stock. Read the risks over at Houseackcom. All this is reasonable. This all makes sense. Here's a realtor says, Cape Coral is the worst housing market in America right now. And I used to live in Florida. I spent 16 years growing up in Florida. Home prices have tumbled more than 11% in 2 years through May. Most of any major metro area. You've got, here, half-built homes. The area's home prices have declined for 12 out of the last 13 months, and 52% of the homes have experienced price cuts. This is more than anywhere else in the United States. They also have the most underwater homes in the country, with nearly 8% owing more than their homes are worth. That's scary. Once you get more underwater mortgages, that's where all of a sudden, if you get a normalization in the beverage curve, you could potentially get an unemployment spike. The unemployment rate rockets up. Normalization of the beverage curve is basically just an increase in layoffs in an environment of low job vacancies. And then all of a sudden, when the bill comes due on these mortgages, oopsie doopsies. The home bought 3 years ago by an investor looking to rent it on Airbnb is fully furnished. The home is listed at $675,000, but the seller cut the price to $500,000, about $100,000 below its purchase price from the prior investor. This was another thing to pay attention to, as well as Airbnb was really something that fostered a bubble economy. In one part because people wanted to escape being around other people in hotels, which incentivized Airbnb. But then people also wanted to temporarily be in areas that were, again, subject to less draconian restrictions, which meant people wanted Airbnbs in locations like Texas or Florida. The problem with this is Airbnbs are usually way over improved. So what happens is you buy a house that's, say, worth $400,000, and you do your renovation on it as a fixer-upper, which might be an $80,000 renovation. But then you spend another $80,000 or even $120,000 or $150,000 doing extra things like putting in a pool, pickleball courts, staging, expensive furniture, Disney designs when you're close to Orlando's Disney or whatever, to make your Airbnb look thematic, to try to make it stand out on Airbnb as an experiential Airbnb. The problem with this, all of those extra improvements that you put into the property don't actually create value for the property because you're over improving. In real estate, home valuations will always collapse to the mean. So if you have a house that is a complete fixer-upper, it will sell for probably less than it's worth. And, mostly because people don't want to do the work, and the effort that it takes to get back to that mean level is usually overvalued by people. People think it's going to cost a whole lot more to bring it back to the mean. That's where investors know, oh no, I only have to do basic things like paint, carpet, bathroom, kitchen, and I'm going to get back to that mean pricing. That's how you can pick up a good deal in real estate. That's how you can explode your net worth, by buying a good fixer-upper deal. We call them wedge deals at Houseack. That's what we do at scale, in different parts of the country with Houseack. And if you over-improve a property, you always get pulled back to the mean. It's just some of the problems with real estate most people don't understand, but that's okay. That's why you subscribe to the channel here, to understand it and get the insight in terms of how this works. It's been an on-off market for the year. Homes have received 0 offers. We're cutting the price further tomorrow. Housing markets throughout the United States are grappling with high mortgage rates, but Cape Coral is suffering from nearly every affliction that you can have. Right, the Airbnb disaster, natural disasters like hurricane issues. Mind you, Florida is not necessarily a bad place to buy. You just need to buy, in my opinion, in places that are further away from the coast and in areas that are more hurricane resilient. I'll give you one of those for free over here because I love y'all. But, you know, a county that I actually grew up in is Broward County, Florida. I grew up in the 33324 zip code. And here what you find is as you get maybe 20, 30 minutes away from the coast, you really remove the flood risk, and you have properties that are frankly built to, you know, that are designed to withstand the issues of hurricanes. Like none of, I can't do Google Street View and gated communities apparently. But you go into a master planned community, you know, like Weston Hills, which is an absolutely gorgeous environment. Like love this area. You don't really have an environment where you're really concerned about hurricanes and the hurricane storm damage that you would get on the coast, which is also where you got that Airbnb demand and sort of this temporary fleeing remote work lifestyle. At the height of the migration frenzy, Lee County, where Cape Coral is located, had 35 homes available for sale. Now there are 12,000 listed for sale. It's 4x. With so much supply and very little demand and a seller base where over 50% are cutting prices, I'd expect this downtrend to continue. I think it's time for a flight to Florida. These are, by the way, mosquito screens in case you've never seen one, because you do have to deal with bugs in Florida. And look, they both look unhappy. This is a very 90s beach style, maybe even 80s, late 80s, 90s beach style remodel there. One of the most sought after neighborhoods in the kitchen. They didn't think they'd have to wait this long, or in the most sought after neighborhoods in the city. They didn't think they'd have to wait this long to sell. 15 price cuts, and 2 years later, they still haven't found a suitable offer. You know, something to remember too is it doesn't really matter how many price cuts you had or what price you started at. Like people say things like, oh, you know, it was listed for $700,000 and we cut the price to $500 and it's still not selling. Sometimes there's this nature of like you are trying to like, you're not shooting ahead of the running deer. If the running deer is going like this and prices are going down, and you start at $900,000 and your house is really worth $700,000, and then you get to $700,000 over 2 years, but now it's actually worth $500,000, you've done nothing, right? Like you've failed. You've been chasing the deer. You're supposed to, in real estate, take your gun and you shoot ahead of the deer. You have to price ahead of where the market is in an appreciating or a depreciating market. But again, most people are too stubborn to actually price properties appropriately, and then they end up sitting. I just hope that if we end up selling, it's not so far down below our asking price that it puts us into debt. Nobody cares about your asking price or how much debt you have. Absolutely nobody cares. Area's apartments are also struggling. New developments are offering deep concessions. Well, yeah, again, like this is the danger with new construction. New construction also typically sells for a little bit above market prices. And the way that new construction kind of manipulates home buyers is they feed you a bunch of upgrades to make you think you're getting a good deal, but you're really paying higher than what the market would bear if you went to resell that property. The resale market does not care about your upgrades as much as a new construction home buyer cares about upgrades, because a new construction home buyer is going to put a dollar for dollar value on that, $20,000 flooring upgrade that they're buying. The resale market might only put a $4,000 value on that $20,000 floor. That's because, again, now it's a used product. It's like a used car. Everything merges back to the median. And until you take an economic point of view and understand how real estate pricing works, you're always going to make mistakes in real estate investing. Fortunately, with my real estate startup, Houseackcom, I'm not trying to shill it. Actually, I am. I think we're in a really great place because what we have is about $73-ish million of cash in real estate and no bank debt. And you can invest in our convertible round, which the earliest it would convert is 27. But basically, you only convert if our stock price goes up. And right now, we've really only been raising money as a real estate only company, where we buy homes and we buy really good deals below market value and hodl them. You could see our properties and sort of just the renovations that we do over here, and you can kind of scroll around on the main page of them. We should probably update what the properties are worth, because they're probably even worth more right now because we bought in areas that are underbuilt. But anyway, this is before some of the exciting things that we're doing and working up that I think cost very little money, but are investments into a huge future. So I'm very, very excited about what we could potentially pull off with Houseack. Knock on wood, no guarantees. That said, going back to this Wall Street Journal piece here, Let's see here. Hurricanes have also punished the West Coast. Many homes flooded. Well, those are close to the coast again. Although you don't get too many people that go too deep inland from the West Coast. You get that more from the East Coast. At the same time, new state regulations meant to fortify condo developments after the condo collapse that killed 98 people in Miami are pummeling the market. Condo owners are dumping their apartments on the market because they can't afford what amounts to six-figure special assessments. Right. A special assessment is basically when your HOA says, hey, we need to like shore up the foundation or put a new roof in or whatever. And they just take the cost and divide it by the number of owners that there are. People think that HOAs are a ripoff, but something you have to remember about an HOA is that they're nonprofits and they're usually money losers. You know, it's just basically a coordination of your neighbors deciding on upgrades for the entire building. So, you know, when you look at it as a nonprofit, they're really just paying for your slice of the expenses that your building would really require anyway in common areas or otherwise, or utilities or what. So let's see here. Somebody's struggling to find clients in their makeup studio. The cost of living here doesn't match the wages. Everyone is begging for work. Well, that doesn't sound good. Home builders who can no longer make their numbers work have pulled out of some construction projects, offering them for sale as is. Yeah, I've seen this as well. In 23, we went to Phoenix and we saw some flippers that were losing their pants that are like, please just buy the property as is. And I'm looking at it and I'm like, it's permitted, it's a shell. I just have to go put drywall, kitchen, and baths in and it's done. But I thought even then the numbers didn't make sense because, you know, pricing was getting hit over there. So it wasn't the most ideal, you know, to pick up on. And that's something you have to be aware of with picking up these construction projects too, is if you pick up a construction project, you know, there's a delay between when your completion hits and, you know, pricing can be substantially different then. And a lot of people who develop want to resell. This is kind of like how in New York you could hit that rent stabilization. You develop and then you want to resell, but your buyer ends up getting stuck holding the bag on the stabilization rents. Okay, let's see here. Home sits on a freshwater canal. The drywall is up, but the roof is incomplete without doors and windows. The home is exposed to the elements. A faint line of water damage and spotted mold is visible on the ceilings, where small spiders have settled in. Investors are also running for the exits. Some rented out their homes but are now competing with cheaper multifamily developments, and the Airbnbs drew less interest as soon as Americans began traveling abroad again. Something to keep in mind too is hotels have gotten a lot better. Like Airbnb really woke up the hotel community for, hey, like we're gonna provide you better service and a cleaner stay and a more consistent stay. I personally have stayed in Airbnbs in Florida, and I'm like, my gosh, the quality controls are horrible in many of the Airbnbs, and it makes it for a very like scummy rental environment. Like I will rather rent 2 hotel rooms next to each other, connecting hotel rooms, than an Airbnb because I can get consistent quality, often frankly at a cheaper price because there's just so much competition. Someone just recently sold a rental home at a $200,000 loss when the fundamentals stopped adding up. It was either keep losing $49,000 a year or take the tax break on loss. Honestly, $49,000 a year, she's probably including principal pay down in that. That sounds a little high. That's a $4,000 loss per month. That's either like like you really screwed up your investment projections on Airbnb potentially, or you're including principal pay down in this, which really isn't losing money. You know, you're moving it into another investment basically. Now, if that investment keeps depreciating, fine. But again, like you do have to consider when people quote their monthly payment losses, you end up with some of that being principal. Look at this, foreclosure boat tours. Free foreclosure boat tours. What is this, a realtor giving boat tours? That is hilarious. Oh, that was in 2009. Okay, yeah, I didn't think we were starting to see that yet, but that's actually funny. Couldn't get rid of the properties in 2009. At this time, many Cape Coral homes were bought with cash. New regulations require strict underwriting, more money down. Still economic uncertainty, blah-de-blah-de-blah-de. Yeah. There, yeah. Oh, yeah, and then you don't have the property tax limitations that California does. See, what, like, people always shit on California because they're like, oh my gosh, but California sucks for landlords. It's actually great for landlords. They keep your property taxes low. They limit new construction. Like, if you own real estate in California, you're doing great. you want to go buy real estate in California. It's hard, you know. It's challenging to get in. But again, those are some of the ironies just of how real estate dynamics work. And in order to understand real estate, you really have to be a professional in a market, or have just a lot of experience, or get a realtor that knows what they're doing to actually help advise you. Now, the tough thing with that is, you know, how many realtors have a lot of experience? Well, that you have to kind of sort out yourself, because there are a lot of people who don't. So you got to find the right person. Makes it challenging. Tough housing market for some of those overbuilt markets. Austin, Texas has been getting hit hard, and now parts of South Florida. Pretty wild. Houseackcom owns no properties in either of those.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.